All right, Mike, I don't want to make too little of that manufacturing data, which rocked our markets yesterday, but I also won't make too much of it because manufacturing is only about, what, 17% or so of the United States economy. You're going to be paying more attention to what they call the non-manufacturing or the services side of the data, correct?
That's true. So I think if you look at the consensus view at the moment, it's that the manufacturing sector is weak, and we saw that in the data yesterday, but that the service side of the economy is holding up along with the consumer. Now, we've seen some signs of slowdown for the consumer. If you look at the year-on-year change in the present situation component of the consumer confidence index, that's now at about 0. So that's flagging that the risks are rising a little bit. So now our attention turns to the data from the service sector and the non-manufacturing one to see whether last month, obviously, that came in pretty strong, but the PMI version, the market version of that survey, had been quite a bit weaker. So it'll be interesting to see whether the data tomorrow echoes some of the concerns coming from the manufacturing sector or continues to paint a picture of a healthy service economy.
And what do you think is going to happen, Mike?
Well, I think there's a risk that it comes down a bit, right? So I think the level that we would be concerned is if you saw the non-manufacturing survey head down below 52.5. Now, it would have to be quite a significant fall for us to get there on the reading this week. But if we start to see that fall, then it just raises a few concerns that the story that everyone is pinning their hopes on, that the consumer, the service side of the economy is holding up, may not be as strong as everyone thinks, because you're starting to see a few cracks in that story. If you look, for example, at the year-on-year change in aggregate hours worked for the US economy, it's come down from a run rate of about 2.7% growth to only about 0.7%. And then I look at employment in the retail sector, and the retail sector, again, obviously not materially impacted by the trade war, and you've seen jobs being shed in the retail sector now since about the middle of last year as wage pressures, I think, start to put pressure on margins. So that's what I'm pretty focused on, both the non-farm payrolls report at the end of the week and the ISM non-manufacturing survey as well.
Yeah, because there's weakening and there's weak and there's slowing. There's different levels of a slowdown. There could be a long slowdown for a couple of years, Mike, or we could hit the brakes entirely and possibly being a recession in 12 months. Do you see a recession in the next year in the United States?
I think the risks are rising. So in terms of the level that you talk about, the difference between slowing and stalling for the economy, when we look at indicators, take non-farm payroll growth, for example, the run rate of non-farm payroll growth on a 3-month average has come down from around 250,000 at the beginning of the year to about 150,000 at the moment. So it'll be interesting to see how that comes out later this week. Historically, the level at which you start to worry about recession risk is were that 3-month average to get down to 100,000. So we're not there yet. It's not yet flashing a red warning signal, but several indicators such as non-farm payrolls, also if you look at the Conference Board's leading economic indicator, the year-on-year pace of growth in that has slowed to only 1.1% year-on-year. So it's all painting a picture of an economy that is slowing, not yet flashing the red warning signals. It's really only the manufacturing sector that's flashing a meaningful warning signal. But the other data is slowing. So I think we need to focus on that and see whether the manufacturing sector is an isolated concern or whether it starts to infect the consumer and the service part of the economy and the labor market.
Well, do us a favor, Mike. If you get that red warning signal flashing, you let us know. We'll get you back on the show. Mike Bell, thank you very much.